Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, March 4th, 2021. Wanted to get a video out there, to just follow up. Sometimes, you can convey a lot more in a video than you can in just a chart with a couple screenshots. So, the theme of this video is going to be really some, I guess you call it bifurcation, two different views on the technicals right now. By that I mean tech and the market leading stocks. Everything I've been hyper focused on lately has broken down, but not by a huge margin so far, or at least not now. We were down there earlier, but you always get a lot of movement after the open. So I'll take a sell signal for what it is until it isn't. What I mean by that, if they ramp this up, I said earlier, I showed you a chart with the weekly chart of QQQ. Looks like we're going to have a solid sell signal. Well, we had one last week, and we would have confirmation if we close the week red, if we build on these losses so far. So here's what we're going to do in this video is look at the S&P 500. Since I've been focused on the NASDAQ 100, again, I have just a feeling of unease right now, or can make a case that quite a few stocks in the S&P are going to bounce. So this is really where I'm going. This is mostly almost exclusively a tech thing going on right now, and I say it all the time, market's going nowhere without tech. If tech corrects, if QQQ heads down here to 297, it will almost certainly put pressure on the S&P 500 and stocks that are not in the technology sector, and that is due to forced selling. If tech drops, it's the largest component of the S&P 500, about 25%, a quarter of it, and it's about over half of the NASDAQ 100. So here's where we're at. There's the breakdown. It is what it is right now. We're below that level. This is an objective short entry, but let me tell you, I'll show you some things that give me pause. And if you're bullish and you think this is going to prove to be a whipsaw signal, a false breakdown, I'm going to give you some trade ideas right now. Quite a few big name stocks are at support. So what we're going to do is flip over to SPY, the S&P 500 ETF. My benefit of the doubt trend line, we're below it, but not impulsively. That's one thing. Okay, give me pause right here. Need to see, as I said in recent videos, we need to take out the recent lows. Here's the trading range in SPY, and so far we haven't. We're still below the candle from last Friday right there. As of today, we didn't undercut it. So okay, that's one thing that can make the case that we could have a whipsaw signal here if SPY doesn't break down. But more so, let's now look at the individual components. I have a watch list to the off the screen here on my monitor. I'm going to click through, and what it does, that watch list is sorted by market cap, starting with the largest. So these are going to be your highest weighted components in the S&P 500 because it's a market cap weighted index like the NASDAQ. So, all right, Apple broke down below that. Yeah, I mentioned it's similar to bear flag. It's a little price channel consolidation range, but we didn't take that previous low yet, but we are below it there. So this is a bearish technical posture. But here's my point. Apple is not going to go to 106.50 if the breakdown in QQQ proves to be a false breakdown, if the SPY holds the lows and we rally from here. And again, what I'm about to get to, if a lot of these market leading stocks bounce off these support levels they're at. And they don't have to bounce. They can just consolidate there, or much, much worse, they can break these support levels. All right, so we'll get to those, and well, we'll move through these in order. So there's Apple, I'm sorry. Technical, precarious technical posture, bearish technical posture, because it broke that flag. But again, you really want to see, to put the nail in the coffin, see that low right there, that reaction low from Tuesday the 23rd of February taken out. But as of now, and it's also still below my 125.75 position. So I'm not going to spin this as anything but bearish technical posture right now. Near term, I'm talking, days and weeks out. But we'll see what happens there. Microsoft can't put the nail in the coffin on this one yet, because as I've talked about, we have this multi-month trading range. We broke out here right before earnings, built on the gains, back tested it, and we're simply back testing again today. See, I zoom in real tight. We dipped into the trading range, but by a very small margin. All that matters is how we close here on the daily, or you get a big candle either way. So bulls still have this one right now, and here's the point of this video. Trade ideas, trade ideas, trade ideas. If you are bullish, even if you're not sure, it's always objective to go long on a pullback to support with a stop somewhat below. So there's a case you could buy Microsoft here with a stop below. Let's say today's low. That's 226.05. So a stop just below 226 gives you a very good RR. I mean, imagine if this is just a back test of the breakout and we're on to the next big trend in Microsoft, 20, 30+%. Likewise, if we close the day down solidly in the trading range, or any, doesn't have to be today, could be tomorrow, anytime soon, that's going to be bearish. And then more importantly, I think when we take out if and when this trend line right here, that will probably send us down to the bottom of the range. That's Microsoft. But here's the key takeaway as I'm doing this video: at a very, very well-defined support level. It doesn't take an expert in technical analysis to see this trading range and all these highs and then that breakout and that back test. Again, more recent reactions on that level that further validates 228 as a support level. Where it was validated here, especially on the breakout, it was additional reactions give further validation to that level. So there's one of the big market leaders at support right now. Amazon, no big opinion. It broke below that line, but it's a little bit above this next support level. We'll move on. Alphabet at support or close enough. This is an uptrend line without a lot of reactions. I say it always takes, in my book, that is, 3 distinct reactions to validate a trend line. We had that, and then a slight close below it yesterday, and we're back testing from below. And again, if it can regain it, that's going to be bullish, but it's going to keep it in. Here's the thing. It'll be near-term bullish. You'll have some short covering from the breakdown today, buyers stepping in, and I promise you this, there are buyers stepping in today on a lot of the stocks I'm about to talk about because they're at support. And if Alphabet can get back above here, then that's just a little whipsaw through, and we may make another thrust within the wedge, put in that divergence. I've laid this scenario out in one of the recent videos. See, this is one of the few stocks that is very bullish, the technical posture, holding gap support. And, I could see if we get another thrust up, that would put us higher within this bearish rising wedge, give us negative divergence there, and then go on to breakdown later. So we'll watch, and I'll do updates on these. Facebook still within that symmetrical triangle I pointed out the other day, but more importantly, at support. The lower line is an uptrend line. That's support. The upper line is resistance. So here's another one. What is that? Probably the third one I've already covered. Big market leaders at support. Alphabet, just covered that too. The recent lows right there, and the bottom of the gap right there, top of the gap, big support. This is GOG, the other share class of Alphabet. So again, that's same company, different share class stock, but we've already hit on now 3 or 4 at support. Tesla, 661-ish, 662, 178 was my first target. That was hit there, hit. We're slightly below it, but as I said, just below the price support, we have trendline support, which was kissed perfectly today. Look at that. I zoom in. I have not modified this trend line, and we hit it perfectly at today's low. So there's another market leader that just hit a key support level. And that's it, guys. I'm not trying to wishy-washy. Yeah, I said we had the sell signals on the Qs today, but I'm seeing Tesla's a component, as of everything I've just covered, of the S&P 500 as well. So they're hitting support. Buy programs, algos, humans, they're all going to come in here and buy support. It's a matter of how far we go. And then if we break it, then that's very bearish. That opens the door for the next target there. And if we happen to hold up here, well, it's not uber bullish. It just says, look, they foiled what could be a more powerful breakdown. But we have resistance just overhead. So, if you're bullish, you go long Tesla here at support with a stop somewhat above, or you wait for a breakout of the trend line to either take a position or add to a position, break out of that downtrend line. Or if you want to short or add to a short, you want to wait for a break of the trend line there. Okay, so that's Tesla, again, at support right now. JP Morgan, JPM, breakdown back testing from below with divergences building. It's just a matter of time before these divergences weigh on this one. So that to me is here's the thing. Now don't get me wrong. It's just off all-time highs or multi-year highs. I think all-time highs. Breakdown and back test. So it's a bearish technical posture, but yet the stock is in an uptrend. So keep that in mind. To see it take another leg down, which I think comes ultimately, depends on how we close today. Today is going to be crucial. So I'm watching, as I'm doing the video, I'm watching the NQs try to regain that support level I showed you earlier today. Here, I'll flip over that to tell you. It's all real-time stuff. There it is. See, we're coming in back testing again. This is my support zone right here. We back tested it earlier, right before I got the video out this morning, but we're back testing again. If they regain it, that's a false breakdown, aka bear trap. That's going to be near-term bullish unless we take out then those lows turn back down. So let me continue on. I want to get this video out to you guys as soon as possible. So JPM, Visa, well, this one's at resistance, not at support. Big resistance right here. But if it pops that, then it breaks out to all-time highs or multi-year highs. I believe all-time highs on this one. As of now, resistance is resistance unless taken out. Negative divergence. So I favor whatever happens today, whether today's a whipsaw in the coming weeks with these divergences. I favor a reversal soon. But if it pops above there, we're going to extend those divergences anytime soon. So that one's at resistance. And if you want to buy, you want to wait for a break above the recent highs, which is right there. Let me no, keep that line there and add another one right there. You can see. There we go, right above those highs. JNJ, this is a big support level. I like this one right now, and it's oversold. It's not deeply oversold on the daily, but certainly on the shorter term time frames, a big support level. This was a big breakout right here. Those are major reaction highs. Look what happened each and every time you got there. Boom, rejection, rejection. Finally, we broke out, and we are back testing for the first time. So this would be, again, if you are bullish and want to go long, and again, you can do so with stops not too far below. This goes either way, guys. I've made the case that I believe, regardless of what happens today, in the coming weeks and months, there's more downside, and especially if we can't sharply close the market green today and get back above those support levels, that's going to open the door for more downside. And then what would be very bearish, okay, video snafu there. All right, so boom, boom, boom. I could probably go back in time, might see some more reactions. But this one broke down here. This was a breakdown and backtest on a correction that was, again, priced into the technicals. Now, here's where I'm going. This is where, quote unquote, the buyers should be stepping in. If I was bullish on this stock, this is where I'd be buying. And, again, the case can be made. However, if the sell signals today stick and we go down and we hit the next targets that I have on the S&P 500, on the NASDAQ 100, and then you start seeing a lot of these stocks that I'm showing you are at support now. If they break down, that's going to be quite bearish. So we're at an important technical juncture in a lot of stocks. And again, when I use the S&P 500, you're going to see a more diverse basket of stocks because the S&P 500, is spread among 11 different sectors. NASDAQ 100, as important as the index is mostly tech stocks. It doesn't have financials and things some other sectors are lacking in there. But J&J at support, another top component of the NASDAQ or S&P 500, and I believe the Dow as well. Here's Wally World, Walmart, WMT. Bearish rising wedge. That was a beautiful pattern right there. Broke down, back tested, just like that JP Morgan I showed you earlier. After breaking down, we back tested, set up a little minor channel below, minor trend line. Broke that, back tested that. Here, I think you can see all that as we zoom in here a little bit. And that's what it's played out for. So, here was our high. It was a divergent high. All these things I'm looking for now in the market and seeing lately in a lot of market leading stocks. But Walmart's fallen. It's dropped 17% to a very good support level right there. So again, another big, market leading or widely held stock, and one that has a big impact on the indexes due to its market capitalization at support. So the case can be made to step in long with a stop somewhat below, or if you're bearish, you want to wait and see stocks like this one take that support out, and then we go down to the next level. We're very oversold. I wouldn't short here. I wouldn't short if it broke down. There's much better fish to fry, in my opinion. If anything, I'd be going long here as a hedge, and maybe I'll do that. Maybe I'll stop the video and step into a few of these stocks to hedge up. because these are the ones with the much better risk reward profile out there. These ones that I'm showing you that have already corrected at support, and they're indexed. So if the mark index goes up, they're not going to fall forever. Sooner or later, these guys will play a game of catch up. MA Mastercard has a some of these levels are old, so I'm going to update. Right there is our previous reaction high, but this was, this 356. We're bouncing on. Really, right now you're looking at about 369. We're up against resistance at previous reaction high. Obviously bullish if we get a breakout, especially if it's anything other than a whipsaw false breakout. But this is one that is at resistance. And by the way, like so many, and this is why I keep that longer to intermediate term bearish outlook now, negative divergence. And those divergences have not played out on this one yet. They have on Microsoft. They certainly played out back here. See that divergent high last time we had it on the daily chart, and look what happened. Last time before that we had it, and there was a nice correction there. We had one there, a little correction there. Disney, bearish rising wedge pattern. Here's your uptrend line right there. It's nice and clean. This is a bearish technical posture. It is a stock in an uptrend, not far off all-time highs. And however, so from that aspect, someone, if you don't, I see charts different. Other people might say, oh, that's a very bullish chart. Look at that stock all-time high, uptrend, making higher highs, higher lows. But I don't, it doesn't take a rocket scientist or a genius to say, if a stock is in an up or downtrend, just looking at the chart, seeing it's falling. I try to look at, okay, where do we go from here? That's the important thing. Is this stock going to continue up for another, what's the next 10, 20% on this one, up or down? And I think down, because this is a clean bearish rising wedge pattern. Last time we had negative divergence, it was small divergence, it was right here. And we broke this trend line, and that was good for a drop from that divergent high of about 11.5%. What do we have now in Disney? A much larger divergent high. The same divergence that started at that point has grown larger. And therefore, that would indicate to me a larger drop. These would be your targets. That's 168, 65-ish, and then 154.85-ish right there. First two targets, if and when that breaks. So again, another market leader at support, and that support's either going to break or hold on a lot of these. And so that's why I'm doing this video. I'm seeing more today than I've seen in a long time. Worth pointing out. All right, NVIDIA. Semis have been weak. Semis, and they've been led for a long time. Divergent high, big negative divergence on NVIDIA. Still within this multi-month trading range right here, but right at the bottom of the range. You can see there as I zoom in, that's support. It's support because we've had a lot of reaction lows there, and it's defined the bottom of this range, especially recently. So again, a critical technical juncture. It also took out this trend line. Now this is comparable to that trend line that I've had on Apple and Microsoft and some of those. Remember, Apple already took it out. Microsoft has not done so yet, but I see comparable trend lines on a lot of these big market leaders. This one took that out, but you have to give it the benefit of the doubt because we're at the bottom of the trading range. So break of that brings you down to these two targets and possibly all the way down here. That one's at 346, that third target. UNH, I'm going to skip that one. PayPal, skip that one. Other than the big divergent high, it's been moving lower, and this is where I think it's headed before all said and done, 216.50-ish. BAC, Bank of America, a lot like JP Morgan. You have this big divergence building here, negative divergence that is, and you have an uptrend line that was recently broken, and it wasn't just broken, it was impulsive. You look closely, see big red candle, and we back tested, and so now you have this minor trend line setting up. So a lot like Walmart. I'll just loop back to Walmart. That's what Walmart did. Set up this, broke down below the uptrend line, set up this little minor channel below as it back tested, and then broke that. That was your next sell signal. Kick back, and then even broke, almost back tested that, and it's been stair stepping lower. So that's what I see when I look at these the bank stocks. They look very similar. They're just where Walmart was 17% or so ago when it broke down. P&G, Procter & Gamble, symbol PG, in no man's land, broke this to 127.56 support. But you can see how these divergences usually and ultimately play out. Not always, but usually. And this was a divergent high right here. And then it started moving lower, but it held support. Like so many stocks, it has these. This trading range was defined better at the lows than the highs. I can't box it in, but look at all those reactions. Kind of a flattish head and shoulders, maybe a double, what they call complex head and shoulder, double-headed head and shoulders pattern. But either way, what you can't argue is that 134.65 was not a good support level. It was. And once that was taken out, boom, hit my next target there. I've had these lines on this chart for a long time. I have not touched this line. Last time I changed that, I created it back on February 2nd, and it's still there. This one was done back on November 13th. So no, they've been there, and that was the last support. We hit it, danced on it, and now again we're in no man's land between my next support target 119.59 and resistance. So if the market can snap back today, then this one has that level to contend with as a resistance overhead. If it takes that out, then it has that 135, 134.65, and those are potential targets too. If you're looking for individual stock trades, especially large caps, and you want to step in and buy, if they gun the market up, this one probably won't make it down to 119.59. It'll probably turn around and hit those either of those upside targets. Home Depot, interesting here. Sideways trading range, like so many other big, large cap stocks. In fact, that extends out there. We just broke down. So there's the trading range. Let me extend it if I can grab it. I'll do that later. I'm just going to move the box and extend it. But sometimes you got to, there we go. These lines can be finicky. And then right here, it broke down just the other day. That was Wednesday the 24th. Impulsive, everything you want to see. I mean, it was super well defined. This is the thing about technical analysis, guys. The better defined, or the more defined a support level is, whether it's a trend line or price support, the more eyes are going to watch it. At least that's my take. And then what happens when it breaks, especially in this case, you had a very impulsive, look at that drop. It dropped big intraday, but it still closed well below there. And then finally it worked its way back up, back tested a perfect back test. Again, this is a trend line I have not modified in a long time, or a support level. Hit that level. I wish I would have highlighted at the time, because that was an objective short entry, and then from there, boom, you could have shorted if you missed the initial breakdown, or added to a short, and it dropped 4.5%. Now what it did as well, let me turn off all the lines. You can see this right here was an impulsive drop. This is a textbook bear flag. A bear flag consists of three components: a flagpole, which is an impulsive move down, which you have here, followed by a level of consolidation, upwards consolidation that takes the form of an upward sloping flag, and that occurs on declining volume, which you have here, followed by then your next sell signal is a breakdown, which there's a perfect breakdown candle, and additional downside. So this is a bearish, very bearish technical posture. It just gave a sell signal yesterday. You've had three objective short entries here, one on the breakdown, two on the back test of the 263 level, that is rounded up, and then yesterday on the breakdown. Where it goes from here depends on what the market does. It could, if we get a whipsaw, we could snap back up. Otherwise, to project or calculate the measured target of a bear flag pattern, you take the distance of the flagpole down to the bottom of the flag, add that to the top of the flag, and that gives you your measured target. It would actually undercut. I always, if I have a support level just below where the flag measures to, or just above, that's the safe bet if you want to cover there. But sometimes these things play out, and we could drop quite a bit more. I'll have to sharpen my pencil on targets. I just want to mention that we have that flag there. Next up is Berkshire Class B. Look at this, divergent high, boom. You can see what happened after that divergent high. Divergent high there. There is your trend line break. Remember, the divergence is not a sell signal, because divergence can and often continues to build. It's a breakdown of a support level, such as a trend line, that is your sell signal. So, that was a great sell signal. That was a great sell signal. Dropped all the way to here. Another divergent high. Without a trend line break, just a divergent high that led to a correction. And here we have a nice clean uptrend line on Berkshire. So again, common theme, but it's at support. Support is support unless broken. Here was a whipsaw. Talked about whipsaws the other day. Maybe today's breakdown in QQQ will prove to be a whipsaw. So far, they're buying up the drop pretty aggressively. I'll get to that at the end of the video. And I'm not going to go over all the stocks in the S&P 500. Obviously, there's 500 of them. But that was a whipsaw, and we're back above support. but in a bearish technical posture. So sooner or later, we'll break this trend line, or it'll be the real deal, and we'll come on down. And I'm going to give another target in case that would be the next or the first target right there, about what is that? 235, 236. Intel, big rejection off resistance recently, as mentioned. That one last time I highlighted this as being bullish was right here on a pullback to the big support level, bottom of the trading multi-year trading range. And Intel, there was your previous reaction high. There was a trend line break that I mentioned. So there was an objective short on Intel recently here at about 63.80 resistance. It's been moving lower. As I said, a lot of the semis have been weak. This one also has, or almost had, close to negative divergence. The indicators were severely lagging. Okay, we'll do a few more and then wrap this up. Comcast, that's a megaphone pattern or ascending broadening wedge. Big divergence building. Look at the negative divergence. Last time we had negative divergence on Comcast was right here. And that was also at resistance. That was a big resistance level. And it led to a nice correction right there, a very tradable correction. Slightly undercut that 42.14 support, rallied up. So it broke out here. That's a big breakout. That's longer term bullish, but we never really made a full back test. We never made a full back test of the trend line. So that would be a downside target should these divergences play out soon. And I don't have a very good uptrend line, but maybe something like this here. Netflix, back to the midpoint of the range. I've covered this one quite a bit, saying here's our multi-month trading range right there, like so many big market leaders. And often I can put a midpoint line within a range, and it acts as support and resistance. So I believe I did an update here saying it was the top of the range, false breakout. Target was the midpoint. We hit it. Then there, we bounced right back. So the midpoint, you tend to bounce between, the top part of the range or the bottom. And so the midpoint is support, and when that support, if and when broken, opens the door for a move down. So here's another market leader at support. It's either going to hold it, bounce back to the top of the range. Longer term would be uber bullish to see a solid breakout above that consolidation zone right here, whereas a downside break would be quite bearish. A few more, wrap it up. Adobe, beautiful trading range. I mean, just a story of so many of these stocks. Big support there, about 451.62, right at the bottom of that support right now. You can see a potential target should that break, and that's what we're going to get. Either this is, again, I always refer to this like a coiled spring, a stock building energy. And so this is how all these break out. There's so many big market leading stocks, or big widely held stocks in these multi-month consolidation range. Quite a few have broken out to the upside, like Microsoft, or a few I should say, and it's a matter of, will those prove to be false breakouts, or are those the first to break out? They're going to back test and then off to the races. So I truly believe how these ranges resolve will really dictate where the market goes from here. Will we have a great second and third quarter, or maybe fourth quarter in 2021? Or are those that have broken out, are they going to fail? Some have failed already as well. So like I said, a mixed bag of technicals, and that's why I'm doing this video. And again, the takeaway, guys, is trade ideas. If you like Adobe, you own it, or you want to own it, where to buy it, that's it. You can step in and buy it right now at support, or you can wait for a solid break to short it. If you step in and buy it, minimum swing target be the top of the channel right there. Or you just, position for a breakout, hold on for a breakout, and if you're bearish, wait for a solid breakdown. Okay, two more and I'll have to wrap it up. Coca-Cola at trendline support. So there's another one coming off trendline support. Support level to watch if broken. Otherwise, you step in and buy. You buy pullbacks to the trendline. And it's a price channel. So all the other price channels I showed you were horizontal price channels. There's an upward sloping price channel. So there's your targets. You have resistance right here at 54.78, but the top of the channel is all the way up there. So you buy there if you're bullish, or you wait for a solid break below if you're bearish to short it. Nike, final one, put in a divergent high right here, nice clean wedge pattern, breakdown back test, hit that first support / target 131.18, bounced off it, but we're back there again. So this is what I'm seeing. A lot of these stocks, I'm going to summarize it here, those that have broken out are back testing or at support now, quite a few, but you know what, usually in a strong market, once you back test a breakout level, that's usually it, off to the races. And again, some not unusual, maybe back test a second time, but then usually off to the races end. What happens, the buyers they're stepping in with less and less vigor. See, they stepped in with more vigor here on that first pullback. It was a pretty well-defined support level. Um, a nice bounce, took it up around to almost to the previous highs, but then they sold it, and they stepped in once again, but it was lackluster. Look what happened, right back there. So to summarize things, I'm still leaning towards that downside scenario, but my job is to show you the chart, show you objective levels. I'm going to be right or wrong on my market calls, but I think my skill set lies are in identifying these key technical levels, valid support and resistance levels, where things might go. And again, it's if you go long or you go short, the key is not to fall in love. Have stops on the other side if you go long of support, or if you short into resistance or a breakdown of support, have stops on the other side of it. If you short a breakdown and you get a whipsaw, then they may slightly whipsaw the cues today. I'm going to wrap it up there. There we are. No, we're back testing. We're still below. We're still below that line. So right now, it is an objective short entry or add-on, and probably the last of them before the rundown. If we're going to hit my 297 target soon, this will probably be the last chance to do so. Otherwise, they pop it above here. How far do they take it up? Keep it simple. The higher they take it up within the range, if they can ramp it up, the more bullish that is. And if they get back to the top of the range, I've been saying this, I said it yesterday, I think the next move to the top or the bottom of the range will likely determine, we'll likely get a breakout. We broke to the downside here, and if we get a whipsaw, that's going to be quite bullish, and we may run up to the top and take that out. Okay, as I was doing that, my computer just quieted down. Usually the fan's whirling and when stocks are moving, and I can just see I lost internet connection. So I can still record this video, but it may be a little bit before I can get out to, maybe I can upload on my cell phone connection or something. Okay, this has been Randy Finney with Right Side of the Chart, and if anything changes today, I will certainly give you an update.